Good afternoon, everyone. Can I just check? Can everyone hear me? Okay, I see a few thumbs up in the chat room. And first and foremost, I'd like to apologize for the technical difficulties they've been facing. But again, without further ado, thank you for your patience, and we'll start the call. So, ladies and gentlemen, good afternoon and welcome to Excl Axiata's second quarter 2024 earnings call. I'm Feroz, the CFO, who will be coordinating today's call. Allow me to remind you that this call will begin with a presentation from the management, then followed by a hybrid question and answers session. If you'd like to put forward a question, please kindly type in the Q&A box. Please do state your full name and company you are representing, and we will read out to be answered by the management. If there is time, we will open your line for any live follow-up questions. As a reminder, this session is being recorded. And also, because of the technical delay, I would like to seek your permission, to also extend the call so that we can actually cover the presentation and any question and answers that you may have to us. So allow me to quickly introduce the esteemed members of the management team. We have on the call today Ibu Dian, President, Director, and Chief Executive Officer. David, Director and Chief Commercial Officer. Abhijit, Director and Chief Commercial Officer for Home and Convergence, and as well as myself. I would like to now hand over the call to Ibu Dian to present the management highlights. Ibu Dian, you may kindly proceed, please.
Thank you, Feroz, and thank you everyone for your time to join our call today. And again, sorry for the delay. We are pleased to announce that in the second quarter of 2024, we succeeded in keeping a steady momentum and deliver solid results in line with our guidance. First, we go to the highlights. In the second quarter of 2024, we sustained our positive trajectory by maintaining a steady overall growth. Growth in revenue was managed at 8% year-on-year, driven by the increase in data and digital revenue by 10% year-on-year. We also managed to further strengthen our profitability through maintaining steady operating expenses, which was able to support EBITDA growth of 17% year-on-year, leading up to a sizable growth of profit after tax by 58% year-on-year. This was attributed to our ability to maintain improvements in our cost structure. Our operational performance was commendable as we managed to increase our mobile subscriber to 58.5 million as of the first half of this year, with ARPU remaining at its highest level of 44,000 rupiah. We also saw a fast increase in the users of our own application, which are Excl and AxisNet, to now reach more than 32 million, providing a strong indicator for further customer expansion going forward. In terms of our fixed broadband and convergence business, progress is well underway as we continue to see subscriber increase and further increase in convergence penetration in line with our steady increase of presence across Indonesia. Next slide, please. Our growth in data and digital services remained resilient as it maintained a solid growth of 2.5% in quarter 2 2024 from quarter 1 2024. On a year-on-year basis, growth was sustained at 10%. Another positive note is that we saw a healthy pickup in subscribers, growing by 900,000 in the past quarter to 58.5 million, continuing to focus on high-quality customers. Our ARPU has remained on an upward trajectory with a 5% year-on-year growth to reach 44,000 rupiah. Since Q1 2022, we have grown substantially by over 20% from 36,000 rupiah, reflecting our ability to execute repricing strategy at times of favorable market conditions. Moving forward, our aim is to continue promoting market reparation for a sustainable industry by seeking opportunities to selectively increase prices. That said, we are mindful of some external factors that may arise going forward, such as affordability and competition from new players within the market. We are also glad to report that the user take-up of our own apps are continuing to show a strong increase, where in the past quarter, it has grown robustly by around 2 million customers. This tallies to an addition of 5.1 million users year on year, bringing the total now to more than 22 million users for both MyXL and AxisNet. This allows us to directly reach our customers, giving personalized offerings that will ultimately attribute to improve ARPU. Next. As a first mover in the convergence space, we maintain a solid progress in the business by keeping up a positive trend in subscribers and geographical footprint. We now have a network of 104 cities across Indonesia, a considerable jump from the 63 cities we were present in the last year. At this moment, we are focused on optimizing our current home pass network along with selective expansion to more potential areas. Total fixed broadband subscribers have reached 267,000, showing a sizable growth of 6% quarter-on-quarter or 73% year-on-year. At the same time, the convergence penetration of our fixed broadband customers has now reached a substantial 81%. Building on this progress, we believe the upcoming edition of LinkNet customers will present an excellent opportunity for us to extensively increase the adoption of our convergence services and further strengthen our position in the fixed broadband market. Next slide. Let us now move to our financial and operational performance for the quarter. Our revenue in the first half of 2024 was booked at 17 trillion and 56 million rupiah, growing 8% year-on-year. On quarter-and-quarter basis, we maintain a commendable growth of 2%, reaching 8.6 trillion rupiah. EBITDA continues to greatly outpace revenue at a growth rate of 17% year-on-year to reach 8.96 trillion rupiah, leading to the achievement of PAT exceeding 1 trillion rupiah. Our EBITDA margin has expanded on a year-on-year basis to the level of 52.5%, compared to the same period last year at 48.5%. These results show our capability to navigate a solid growth coupled with strong profitability in line with our strategy since the beginning of the year. Next slide. If we take a closer look at our operational performance, all metrics are continuing the positive trend in terms of both mobile and fixed broadband subscribers, mobile ARPU, and also traffic. The growth in our mobile subscribers have supported traffic to continue to increase at a healthy pace of 13% year-on-year. This is also attributed to our increasingly improved network and better utilization of our assets to support the growing usage of our customers. Next slide. Our efforts to maximize cost control has resulted in flat OPEX growth year-on-year in the midst of our continued strong growth in revenue. Most cost items have seen a stable cost-to-revenue ratio, with some continuing to improve, such as infrastructure, sales and marketing, and regulatory costs. We continue to implement digitalization and new innovations, leveraging on IT and artificial intelligence that continues to drive down our costs related to these areas. We will continue our cost excellence initiatives going forward, identifying additional opportunities to drive efficiency, optimize spending, and enhance our overall cost discipline. With the aim to keep the momentum of the business, we have strategically navigated our investments at an efficient level, ensuring optimal asset productivity. Our BTS count has already reached 163,884, with a focus more on our 4G network in selective, more potential areas. Our fiberized sites are also kept at a level of 62%. This constant improvement in network has led us to continue reaching out to new subscribers and provide superior customer experience to increase the stickiness within our existing subscribers. The trajectory of our digital channel users is growing sizably, which shows a healthy return in our investment in digitalization. The number of users has more than doubled since the end of 2021, chasing us a strong base for increased customer lifetime value and ultimately take better control of ARPU. Next slide. Touching on our guidance for full year 2024, we will keep the target to grow revenue by high single digit, keeping observant of the potentially changing market dynamics. In order to sustain solid profitability, we will also maintain EBITDA margin guidance to be around 50%. Lastly, we will guide CapEx at around 8 trillion rupiah to ensure we keep a robust network infrastructure. This concludes my presentation for the second quarter of 2024. Thank you, and I will hand over to Feiruz.
Thank you, Ibu Dian. Ladies and gentlemen, let us now proceed to the Q&A session. As a reminder, the Q&A session will be a hybrid mode. To ask a question, you may type in the Q&A box. Please ensure to also type in your full name and company name. If you'd like to further clarify or seek further clarification after your question is answered, kindly use the raise hand buttons and we'll proceed to unmute your mic.
Hi everyone, this is Maya from Investor Relations, and I'll be taking over moderation for the Q&A session. So for the first question, we have Nico from BRI Dana Reksa. He asked, you reported a net addition of 900,000 subscribers. What strategies are you employing to maintain and accelerate this growth? And has the packages of Bebas Puas played a role in this? And what has driven the company to launch this new series? The second one is prepaid ARPU increased further on Q-on-Q basis. Is this ARPU momentum expected to last? And he also asked about the EBITDA margin remains at a higher level compared to the full year 24 guidance of around 50%. What are the initiatives that is expected to drive the profitability to a lower level, and which OPEX items will be most affected? So for this question, I will hand over to firstly Pak David and followed by Pak Feiruz.
Yeah, so thank you for the question. Yes, we have grown our subscriber numbers in around 900,000 subscribers quarter on quarter. To be honest, Bebas Puas, it's still a very new packet, so no, it has not played any role in this. The reason why we have launched Bebas Puas, it's because Excl portfolio was a little bit lacking in the short validity area if we compare to what the market is offering. So we were not playing into that area, and that's a new product, but it's still a new one, so it will take a little bit of time to get some traction. So no, it didn't play. Now, how did we grow then the 900,000 subscribers? As you know, we did also our network has been improving for the last few months, right? So now it's when we are taking the fruits of what we have harvested. So we can see that the quality of our network, it's allowing us to grow in certain areas where our market share was still low. On top of that, the quality of what we are acquiring, it's good quality. So the churn of acquisition, etc., that we see, it's also a little bit lower. So that helped that, okay, we were in low market share, our network quality improved. That makes that the acquisition needs of water quality, and that helps in order to grow the 900,000 subscribers. Now, for the next question regarding the ARPU, it was flattish, but yes, increased a little bit on the quarter on quarter. Do we believe that the ARPU can keep increasing? Yes, we do. Now, as you can see, we are almost in the highest numbers of the industry if we compare with our competitors. But one thing that we keep seeing is that there are different ways of improving the ARPU. But one thing that we see is that once the subscriber moves to our own digital channel, our own application, we see from a 15 to 20% improvement in the ARPU. Why? Because we are able to attack with our AI-based personalization each of the customers independently. So this is being very, very successful. I will even tell you more. The same subscriber, when he or she moves from being a subscriber that is going to the traditional channel in the retail outlet, when the same subscriber moves to our application, we see that ARPU growth as well. So it's not only for new acquisitions or for certain segment that is very digital. No, the same subscriber, when he moves from one channel to another, we see the ARPU improvement. Now, you can see also that our number of own application users keep increasing, and we are in a very good trajectory, and we believe that this is going to keep improving. So I think that is very clearly one source of ARPU growth. On top of that, of course, you can imagine that we will keep doing a lot of selective price increases. And when I mean by selective price increases is, in the past, I already said that we take out the benefits of certain products, etc. Now what we are seeing also is like in those areas where our market share has grown and our network utilization is growing, we are able to keep increase prices by reducing the benefits or reducing the amount of quota that we give, and hence start increasing the ARPU in that direction as well. So that's the answer to the third question regarding the ARPU. I will now let Feiruz answer the other one.
Yeah, thanks, David. Thanks, Nico, for the question. I think with regards to the EBITDA margin, I think we're still keeping to the guidance of around 50%. Typically, in the second half of the year, some of the cost items would naturally move up, right? One of the items would be things like spectrum fees, right? Typically, there's an annual cycle for renewal, so the second half, we expect it to be higher. There are also elements of when we focus on the second half, and especially at the fourth quarter, some efforts on promotions and etc. That typically sees a higher cost that could be in the areas of sales and marketing. And of course, timing of certain projects of enterprise may have an impact. So at the moment, I think we're keeping to that guidance. We'll certainly see how Q3 pan out, right? But again, we will still continue our efforts to optimize the costs and manage the costs where possible. Thank you.
Hi, Nico, if you'd like some further clarification, if you could kindly raise your hand and we'll open the line for you.
Yeah, hi. Thank you, David and Mr. Feiruz. May I follow up on the remarks for the EBITDA margin? So there seems to be a upside risk in terms of your EBITDA margin guidance, and if you can confirm this.
No, as I said, Nico, yeah, I mean, what I'm saying is we're keeping to the guidance of around 50%, right? And typically in the second half, there's always a slightly higher cost, right? That you see even on a year-on-year basis in the last couple of years. So one of the items would be such regulatory costs, and that's in line with the timing of the spectrum renewal fees. So the guidance still remains, right, as it is of around 50%. But as I said, Q3, we'll still continue our efforts to optimize costs where possible. And we'll see, right, in the third quarter.
Yeah, but when you acquire the Lignite subscribers, will this also affect your EBITDA margin? Is this incorporated in your guidance? Thank you.
Yeah, I think with the guidance, what we've said clearly earlier, that this guidance is prior to any impact of Lignite, because I think the timing of that Lignite customer migration is not finalized, right? Because of pending certain regulatory approvals. So at the moment, these have not been factored into the guidance.
Thank you, sir.
Thank you.
Thanks, Nico. And I'd like to remind everyone that if they'd like to put forward a question, you could type, if you could kindly type your name and also your company so we can read out. At the moment, no further questions, so we'll wait for a few minutes for everyone to for a chance for everyone to be able to type in their question. Thanks. Okay, another question has come in. Can you explain the higher tax rate in the second quarter of 24? And what is the expected tax rate for the full year? Are you expecting EBITDA margin to normalize lower from 52.5% in the first half of 24 to closer to 50% for full year 24? Thanks.
Thanks for the question. Also would appreciate, right, if everyone could state your name and company so that we can clearly identify in the aim to address your questions properly. With regards to the question on the tax rates, slightly higher effective tax rate in the second quarter. This is mainly due to an adjustment, a one-off adjustment that's related to the finalization of tax reporting for the calendar year of 2023. And that adjustment impact has been booked in the quarter 2, 2024. I think for the full year, we'll still keep remaining an effective tax rate of about 22%. I think the question relating to the margin was already answered in the earlier question that was raised by Nico. Thank you.
Okay, the next question will be what percentage of the app users are reloading credit via the app, and what is the reason for the jump in staff cost Q on Q? We'll pass this on to Pak David.
Okay, so let me answer maybe the first one. So I don't think we share those type of numbers on what percentage of the app users are reloading. But again, a couple of numbers that you can see is like around 55% of our subscribers are already using our application in order to either buy or do some type of event in the application. Now, there are different things in order to buy in the application. One way of doing it is like you can buy the reload or the airtime in any channel, in a retail outlet, in the e-commerce, etc., and use that reload that you have bought in another channel in order to buy in the application. I think that's a very popular way of doing. So you buy the reload wherever it is, and then you use that reload or that airtime in order to buy in the application. But we have gone further, right? So we have now the multi-payment in the application. So if you don't want to use the reload, you can use any of the e-money plus additional direct paying methods like cards in order to buy the packets there. Then, of course, yes, you can also buy reload directly from the application. But again, what we want the people to use the application for is for revenue generating things, right? So that's how it works.
I think with regards to the second question, the jump in the staff cost quarter on quarter. Typically in the second quarter, you've got an impact of a salary increment. That's number one. But I think also unique to this quarter and what we've stated in our efforts to take back control, right, of the sales and marketing and our plans to optimize the distribution channel. We've also had to hire, right, what do you call it, personnel that would help the sales arm, right, of Excl in trying to go after the sales, right, in the market. Yeah, and in addition, also this the sales force would also have to support the convergence strategy and also targeting the FTTH business. I hope that answers the question. Thank you.
Thanks, Pak Feiruz and Pak David. Next, we'll go to Richard from Trimegah. He asks, when do you expect for Link Net deal to be done? And we'll pass this question to Pak Abhijit.
Hi, yeah, good afternoon. As we've mentioned previously, the Link Net transaction is subject to obtaining the necessary approvals from the regulators and the independent shareholders. Now, all of you must be aware that there was a planned Link Net IGMS, but the regulators have actually requested additional information related to the fairness opinion. So this is what LinkNet is doing. They will set a new date for the IGMS after fulfilling the necessary requirements from regulators. And once they set a date, it will be announced, and then there'll be clarity on when the transaction will be completed.
Thank you, Pak Vijay.
Yeah.
Yeah. Hi, Richard. If you could kindly raise your hand if you'd like further clarifications, and we'll open your line.
Hello. Yeah, I think the answer is enough. Thank you.
Okay, thanks, Richard. Okay, next we have Stefanus from Manulife. He asked for CapEx breakdown, and can you separate it between Java and ex-Java in percentage?
Yeah, let me take that one, Maya. I think the question is the CapEx breakdown, Java and ex-Java. I think we'll give you a sense of more of a ballpark, right? From a percentage-wise, it's 60% ex-Java and 40% Java.
Okay, Stefanus, if you could kindly raise your hand if you'd like further clarifications. Yeah, we have your line open.
Yeah, thanks, Pak Feris. Thank you, Pak. Thank you, bro. Clear enough for me. Thank you.
Okay, thanks, Stefanus. Terima kasih.
Okay, thank you. We'll now go to Henry from Mandiri Sekuritas. He asked a quick question on the ARPU. Excl has booked Q-on-Q ARPU improvement for prepaid and postpaid in second Q, but the blended ARPU was stable Q-on-Q. What is the driver of this stable blended ARPU on a Q-on-Q basis? Yeah, I'll invite Pak David to answer this question.
Yeah, so I think it's a decimal question, right? So in the previous quarter, it was 44, but probably it was like 43, more than 43.5, and now it's still 44, but it's 44 point something else, right? So from 43.6 to 44.4, that's the thing. So that's why it's a good point, right? So visually you can see that both increased, but it seems that it's flattish, the blended. No, the blended also increased, but when you round it to the closest number, it seems the same.
Thank you, Pak David. Henry, if you could kindly raise your hand if you'd like further clarifications, please. Yeah, we have the line open for you. Hi, Henry. Do you mind raising your hand for the clarification of the question? Okay, so we'll go through to the next question as we wait for Henry. Okay, we have the next question from Piyush from HSBC, and he asked about the competition in the mobile segment and what is the impact of Telkomsel Lite plan that we have seen. Again, I'll like to pass this question to Pak David.
So nothing too much from the competition that you are expecting, right? So Telkomsel Lite was launched, I believe, already in February, so it's there in the market. Nothing changed too much, to be honest. I think on that side, everything I would say under control, but everything as expected or as it has been in the last few months. One topic that maybe, yes, we want to talk about is a new competition, right? So maybe the one that you are not asking for, but that we are starting to see from other internet service providers or Wi-Fi providers. On that one, yes, we are seeing that they are being quite aggressive and that they are growing. Again, it's still early days for these ISPs, so probably they are still a bit unregulated in difference to what happens in other countries, right? So I guess that this market also will follow that, right? That in some point of time there will come some kind of regulation, etc. But that's, again, from competition, that's what I can maybe share, or at least the newest or the most different thing that we have seen, right? That it's these Wi-Fi new ISP players.
Yeah, maybe if I may add, David, to give a bit of color, right? In addition to competition, I think it's also the macroeconomic front. I think we also looking at the macroeconomic indicators. We have to carefully watch in terms of affordability, right? So hence, when affordability takes a bit of a pressure, then the ability to increase price, and as well as David was saying, there are options, right, in the market. That could also end up, shall I say, sharing, right, the wallet or spend of wallet from each of the consumer. So I think that's something that we are cautiously looking at it in the second half of the year.
Okay, thank you, Pak. Piyush, we have the line open.
Hi, thanks for the opportunity. Can you hear me?
Yes, sure.
Yeah, so just on a new competition, can you give David some more clarity on which companies or which players you are seeing this competition, and what license they are using, and what kind of services are they able to provide?
So I cannot, I cannot give you the names, to be honest, because I don't know the names, right? There are a lot of what we call local RTRW or local internet service providers. They go down to the almost neighborhood or municipality level sometimes, right? And those are the guys that are offering very aggressive or fairly aggressive Wi-Fi solutions. Yeah, again, I cannot give you names, but they go to the, here they are called like Arte RW players, right? That it's a little bit like very local neighborhood or municipality type of players.
So these are unlicensed players, and is the industry kind of has approached and lobbied to the regulator?
Correct, yeah.
Got it. And like, how is the
So,
engagement with the...
if I may to add, so most of these like small local players, so they provided internet service. Actually, they're not supposed to provide internet service for outdoor areas. But some of them actually put like the access point for outside use cases, which is actually similar to internet that provided by operator, which is against the regulation.
So how is the engagement with the regulator of the government, to clamp down these providers?
Yeah. Currently, all the operator as an industry with our association actually has been talking with the regulator on how to deal with this situation.
Got it. And David, earlier you alluded that you could also take selective tariff hikes in regions where your market share is improving or your network utilization is improving. Can you give some examples of where you have done, and have you taken like headline tariff increases, or you have done it through lower data allowances?
Yeah, well, I mean, this is very dynamic in our company, right? So we have a very dynamic pricing strategy where in those areas where we see that the market share starts, hits already certain targets that we have on our network utilization needs in the targets that we have, then we start monetizing. I cannot give you a specific city name, but again, I mean, this is something that it's quite dynamic, and the more that we arrive into those targets, right, then the more that we optimize the pricing. Now, as you mentioned, usually we don't do it increasing the nominal price, but decreasing the benefit that you receive with the packet. Here with benefit, what I mean is like, there are benefits that can be nationwide, that when we optimize or when we take them out, it disappears nationwide. What I mean more is like, imagine, it's like if for this packet in Bali you get 6.5 gigabytes, now maybe it's 5.5. So we start modifying the benefits in that sense. And again, it's let's say in our DNA, right? In our way of working on how to do a very dynamic pricing. Now especially with AI, it's much more, allow me to say a little bit like not real time, because you cannot change the prices in the retail outlets every day. But yes, we are quite agile into that. Of course, at the subscriber level, everything that goes into our app, yes, it's almost real time, right? I mean, we are very, very effective. But I think the bigger question is like, okay, but what about the traditional channel that it's still driving a lot of revenue and it's where most of the competition is, etc. Right? So yes, we do optimize the prices there. Yes, we do it when we see that our targets of market share and network utilization are there in order to monetize them better. And the way we do it, it's like adapting the packet benefit, meaning reducing the amount of gigabytes.
Got it. And if I may ask one more question, on the data usage, could you talk a little bit about the outlook of data usage, and how is the differential in Java versus ex-Java on usage per subscriber?
Well, actually, the growth is in both, but our data usage as a matter of fact, our data usage in ex-Java per subscriber, it's higher than in Java. It's also true that usually yields are a little bit smaller in ex-Java than in Java, and that's why the ARPUs that you can find in Java and ex-Java are similar, but I will also give you one hint. In ex-Java are even higher than in Java. So ex-Java ARPUs higher than in Java, ex-Java usage per subscriber higher than in Java.
Got it. And the growth also is still happening more in ex-Java on the usage?
Yeah, the
Like
growth is coming in both. Ex-Java usually grow. I mean, you know already that yes, ex-Java usage and ARPU increases and revenue increases usually are higher, right? Which is the case, but it's coming in both.
Okay. Thanks a lot. Thanks, David.
Okay, thank you, Piyush. We'll move to Jimmy from Sukor. Jimmy, if you'd like clarification, you could just raise your hand now. So I'll read out Jimmy's question first. The first one is, how is the industry competition looking like in 2Q? Are there any impact from Telkomsel like in 2Q24? I think that's been addressed. The second one is updates on the merger talks with Smartfren. And also the third one is the 900K net subs added in Q2. Do we break down from which region those subs are from? So on the merger talk, I'd like to hand over to Budian to update, please.
Okay, thank you for the question. So as I think you have been aware, then on the 15th of May, we have made the announcement that our ultimate controlling shareholder, Axiata, have entered into a non-binding MOU with the shareholders of Smartfren, which is Sinarmas, for the exploration of a proposed merger of Excl Axiata and Smartfren. And currently now we are still at due diligence stage, and this due diligence will have still to be completed. And after that, then we will go for the definite agreement. And the closing of this will be still subject to all the regulatory approvals and shareholder approvals. So we cannot give you the indication on the exact timing, but what we can say now, we are still in the due diligence stage. So I hope that answered the question.
Okay, and for the third part, that it's around the 900,000 subscribers, where are they coming from? I will answer something obvious, but they are coming from mainly from areas where we have low market share. Now, again, I know that you like the Java ex-Java type of differentiation. So yes, usually in many areas of ex-Java, the market share is lower, and usually we grow more. But again, it comes a little bit from everywhere, all the regions, although with specifically a little bit more weight in ex-Java because our market share there is lower, and they are coming from our low market share areas.
Okay, Jimmy, do you need further clarification?
Okay, can you hear me, Maya?
Yes.
Okay, thank you for answering my questions, Pak and Bu. Just one follow-up question on the ARPU actually. Why do we opted to reduce the benefits and smaller quotas, yeah, to get higher ARPU instead of, slightly doing price adjustment time over time? I mean, are we quite close on hitting the price ceiling considering the current purchasing power that's not good? Thank you.
Yeah. As I was saying before, right? So when I think it was in the first question when they were asking, do you still believe that there is room for ARPU improvement? As you say, right? When you take a look to the overall ARPU and it's very close to the market leader, we are almost market leaders. We could become market leaders in short. And again, there are two ways of increasing the ARPU. One is, yes, by reducing benefits, increasing indirectly increasing the prices when the elasticity plays in favor, right? Okay, I take out certain benefits, people, and usually we know where to do that, and people will spend more, etc. So I think that's one part. But again, I believe that the biggest opportunity here for us is still in the growth of our own application or digital channel subscribers. As I was mentioning, 15 to 20% higher ARPU, that's a lot. And that's not because it's like a differentiation of the type of customers. No, the same customer, when we move it from one channel to another, we still see that growth of 15% in the ARPU. So it's not because of the type of customer, it's because of the type of personalization that we are able to give in the digital channel. And we still have a lot of room to improve in the digital channel. And again, we are in a 55% of penetration, still can grow, right? So we are optimistic in the near future or in the coming future that ARPUs will continue to improve.
Okay, thank you. Thank you, Pak.
Okay, thank you, Jimmy. So there's another question that's just come in about the competitive intensity of Telkomsel Lite after the Telkomsel Lite launch, and also the outlook for mobile service revenue in Q3. Is there any macro weakness overshadow? So maybe I'd like to hand over to Pak David to just quickly go over your view on this.
Yeah. So I think the competitive intensity after the Telkomsel Lite launch, I already mentioned before, right? This was already launched in February, so any adjustments that were done to the market, I think already done during March or during March, basically, or even April. So to be honest, in that sense, nothing new to mention except from the ISP. Now, I don't know, for the mobile service revenue in Q3, it's still early days to say, right? We are aware that usually for us, July, to be honest, it's a seasonally bad month because we have the school holidays and other type of things. So we know, but we are still looking forward to see how the rest of the month, the rest of the quarter moves, right? With in August that we have the Independence Day and the back to school, etc. So it's still early days. Now there is a reality, and that's we cannot hide that it's the macro situation or the spending power. It's not the best. That's a reality. So there is a weakening in the spending power from the customers. We will see to what extent it hits in this quarter, right? In the shortest term. Feiruz, I don't know if you want to add something.
Yeah, I think that's why I think in the second half, we're keeping a close watch as we see. I think some of the indicators, if you monitor the macroeconomics of Indonesia, so certain things like, for example, one of the staple diet, right, of Indonesians are rice. So the rice price has actually steadily increased, right, in recent times. I think the increase is also it's much higher than the highest retail price that the government set. So clearly some of the shall I say ability of spend or share of wallet has to be moved, right, towards the spending in terms of staple foods such as rice. Furthermore, that when you look at the near middle class rather than the middle class, that's seeming to be suggesting a slight shift upwards, which means that there's a slight pressure on the middle class. These are some indicators that we see. So we're keeping a close watch in terms of, again, our ability, right, to also raise prices as well as how consumers then would have to decide in terms of the alternatives, as we've highlighted, not just on mobile, but also other source of communication access to satisfy their ability to connect and consume data. So those are some of the things that we'll continuously watch, right, in the coming quarters.
Okay, thank you, Pak. We'll move to Manja from Fitch Ratings. He asks, is there any updates on when the government may conduct the 700 megahertz and 2.6 gigahertz spectrum auction? I will kindly pass this on to Budian.
So as of now, there have been no official statement regarding the specific timing of the spectrum auction. But nevertheless, we are actively preparing for it to take place at the soonest. So whether it will be completed before or after the new management, the answer may be yes and maybe no as well. But on the spectrum, we're still waiting for clarification from the government on the exact timing.
Okay, thank you, Budian. Mengja, if you could kindly raise your hand if you'd like further clarification. Yeah, we have the line open for you.
Hi, thanks, management. So, also previously there were talk about the potential incentive from the government. So, is there any update you could share with us in terms of whether that is still under discussion or consultation between government or the telcos? In general, what is the current status of this potential incentive? Yeah, thanks.
Yeah, so actually all the operators under the association, we've been talking with the regulator, with Menkominfo on the potential incentive that they can provide for us, because we all feel that the regulatory charges is already too high, and that discussion is still going on. So we hope that we can actually close this discussion soon with the positive results for the industry.
Okay, yeah, thank you.
Thanks, Major. Thank you, Budian. Yeah, we'll move to Melvin from Stockbit. He asked, can you explain the decrease in the interconnection and other direct expense on a yearly basis? And additionally, could you clarify the increase on quarterly basis? Is this due to seasonality? Thank you. So I'd like to hand over to Pak Feiruz.
Hi, thank you for the question. I think the question is regarding the interconnection costs. I think clearly one of the main drivers of interconnection costs are the voice, SMS, as well as the international. I think where we're seeing that the decline is coming from, apart from the voice trends, which is fairly increasingly small because data makes up about 93% of our revenue base. But SMS and international interconnection has come down on a year-on-year basis. I think from a quarter-on-quarter, that the jump is coming from seasonality due to the Hajj season, and that's driving the interconnection on a quarter-on-quarter basis. Thank you.
Thank you, Pak. Melvin, if you could kindly raise your hand if you'd like further clarification. Okay. We'll move to the last question that we have on the screen here from Danif from Mandiri Sekuritas. He asked, didn't the Ministry of Communication and Informatics issue a regulation to prohibit the RT/RW net? And how is the progress on that?
So Danif, thank you for the question. Yes, actually there is a regulation for that, but I think the problem is not the regulation itself, but how to enforce this regulation, how to monitor if there is a violation on any institution or any companies for this. So because this RT/RW net is actually happens all across Indonesia. Not only in Java or big cities, but actually even in remote areas and small villages. So how to monitor, how to detect, and how to actually apply consequences for them is the main issues here.
Thank you, Budian. Danif, do you want further clarification on the answer? If you could kindly raise your hand, please. Yeah, Danif, we have the line open.
Hi, thank you for the answer. It's clear enough for me. Thanks.
Okay, thanks, Danif. Okay, at the moment, we have no further questions on the screen. We'd just like to give everybody another minute if they'd like to put forward a last-minute question. Okay, so we'll give one last question here. Given the weakness of the consumer segment, does this affect your fixed broadband deployment as an internet for families? What is the ARPU currently for fixed broadband? Yeah, I'd like to ask Pak Abhijit, please, to kindly take over this question. Thank you.
Yeah, sure. Thank you for the question. Yes, so far, what we have discussed before is the affordability, right? So we are watching this with very carefully. And one aspect of the competition from these local RTRWs is not just the mobile, right? It also impacts the fixed, and they are super aggressive on price. So far, we haven't seen the national players actually enter into a full-fledged price-based competition, and we have not done so either. I hope this answers your question. Was there a second part?
Yeah, what is the
Oh,
ARPU
sorry.
currently for fixed broadband?
Yeah. This question was specifically about the deployments, right? So yeah, it's a very we have to be careful about deployments, right? Because the competition is not static, and by competition I mean it's not just the national players, as we discussed, is these local players as well. So while there is still significant growth in the market, we need to be selective about which areas we go. We already have a huge number of homes passed, which we want to monetize. But we'll keep on expanding, but selectively, keeping in mind the degree of competition there. I hope that answers the question. Is there a follow-up question?
No, Pak. So that concludes the question. Thank you. Okay, everybody. So we'll conclude here for the Q&A session. If you'd like further clarifications or if you'd like to put forward a question, you could kindly reach us at Investor Relations here at Excl. So I'd like to kindly invite Pak Feiruz to kindly close the session. Thanks, everyone.
Yeah, thank you, Maya, and thank you, everyone, for joining today's conference call. Once again, we would like to thank everyone for your participation. Apologize for the inconvenience earlier from the technical glitch. And again, once again, thank you for your kind patience. As Maya said, should you have any further questions, do not hesitate to contact Investor Relations. Do stay safe, stay healthy, and stay tuned to the next quarter.
Thank you.